You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Tuesday, May 28th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story of the day is from investing.com. It's the top 5 things to know in the market on Tuesday. The first thing to know is Europe's populist push fizzles. Mainstream political parties held the line in elections for the European Union Parliament as right-wing populists failed to make significant gains on their showing from 5 years ago, although traditional center-left and center-right parties leaked support to the Greens and other centrist blocs. Results from the UK showed more voters defected the pro-Remain parties from the Conservatives and Labour than the pro-Brexit parties. The Brexit party of Nigel Farage emerged as the party with the most seats. In Italy, speculation on new elections rose after the right-wing populist Lega gained at the expense of its partner in the government, the Five Stars movement. The yield spread between Italian and German 10-year government bonds, a barometer of political risk in Italy, rose by a modest of 2 basis points to 269 basis points. The euro was little changed at $1.1197. The second thing to note today is Trump says he's not pursuing a regime change in Iran. Crude oil prices fell to a 2-month low after President Donald Trump said he's not looking for a regime change in Iran. The comments eased some of the concerns about geopolitical risk, one of the few factors supporting crude prices, as the worsening trade war between the U.S. and China takes its toll on the global economy. International Brent blend futures were at $67.48 as of 5 a.m. Eastern Time, having fallen from over $69.20 overnight. U.S. crude futures were down 0.4% at $58.41. Figures released on Friday showed that financial market players had cut their bets on crude for a 4th week in a row. The fall in prices led U.S. oil companies to cut the number of drilling rigs in use to their lowest level since March of last year. The third thing to know is Fiat Chrysler proposes a Renault merger. Fiat Chrysler Automobiles proposed a 50-50 merger of equals with French automaker Renault, a deal that would create the world's 3rd biggest automotive group behind Toyota and Volkswagen. The U.S.-Italian group's offer includes a special dividend of 2.5 billion euros, that's $2.8 billion, to equalize the value of the companies. The move comes weeks after Renault's long-standing strategic partner Nissan rejected fresh overtures for a full merger. Relations between Renault and Nissan have soured as a result of the fraud charges brought in Japan against Renault's former CEO, Carlos Ghosn. Fourth thing to note today is China sounds the alarm over the yuan. Hua Shuqing, China's top banking regulator, warned speculators against short-selling the yuan in a speech on Saturday, saying they would inevitably suffer a huge loss. The yuan opened stronger against the dollar on Monday after the comments, but lost most of its gains after data showing that Chinese industrial profits posted their steepest drop in nearly 3.5 years in April. Profits fell by 3.7% year on year. The dollar closed at 6.8911 yuan in Asian trading. Weakening profitability at China's companies has been one of the main reasons why analysts fear that Beijing could be forced to let the yuan depreciate to absorb the shock of U.S. tariffs. Hua's comments suggest Beijing is as worried as anyone else by that scenario. The fifth thing to note today is the Bitcoin rally. Prices for Bitcoin surged nearly 10% to their highest in over a year, although reasons for the move were as hard as ever to fathom. The digital currency hit an intraday high of $8,953.80 before retracing slightly. The move occurred overnight during Asian trading, with most of it happening within a half-hour window. Our second story today is from investing.com as well. Huawei holds on to the number 2 smartphone spot after the U.S. ban. Chinese telecom company Huawei held on to its spot as the world's second biggest smartphone vendor in the first quarter, despite being blacklisted by the United States, research and advisory firm Gartner said. Gartner also said Huawei continued to reduce the gap with Samsung, but warned that growth could be limited in the near term. The United States on May 15th blocked Huawei from buying U.S. goods, saying the company was involved in activities contrary to national security. The Trump administration softened its stance last week by granting Huawei a license to buy U.S. goods until August 19th. Gartner and Samsung retained its top spot in worldwide smartphone sales, achieving a 19.2% market share in the first quarter of 2019. Huawei achieved the highest year-over-year growth among the world's top 5: Samsung, Huawei, Apple, and Chinese smartphone makers, OPPO, and Vivo. And our final story today is from CNBC.com. 10-year Treasury yield drops to a 19-month low as the trade fights threaten U.S. growth. The yield on the benchmark 10-year Treasury note fell to a 19-month low Tuesday, as Wall Street grew more certain that the U.S.-China trade war will last longer and afflict GDP growth more than first thought. At around 8:31 a.m. Eastern, the yield on the benchmark 10-year Treasury note, which moves inversely to price, was lower at around 2.29%, off a 19-month low of 2.273%, notched earlier in the session. The yield on the 30-year Treasury bond yield traded at 2.723%. That's up from a December 2017 low of around 2.703%. The 2-year Treasury note yielded 2.149%. And that, ladies and gentlemen, is news you can use for today, Tuesday, May 28, 2019, your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great week.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.